Welcome to this webinar. Really happy that you can all join us today. We hope to make this an interactive session, so please ask your questions and I'll try to answer them. Some of you know about Apollo Capital already, so I'll just give a brief introduction about Apollo and talk a little bit about our investment strategy, what we see in the market right now, and then we can go to Q&A. So Apollo Capital, what is it? It's an actively managed crypto fund. We are operating under an ASIC license. It's an Australian unit trust. We started trading on February 1st, so we just closed our first month some weeks ago, and I think we will announce our official performance today or tomorrow. I think we are up around 5% for the first month. We're pretty happy with that. The broader crypto market was down some 15% during February. I think a fund makes it really easy to get exposure to the crypto market, and that's our goal with Apollo Capital, to give investors exposure to this, what we believe is an emerging new asset class. It's much more than just Bitcoin. Most people have heard about Bitcoin by now, but there are over 1,500 different crypto assets out there. Last year, Bitcoin was up 10 times. The second largest crypto asset out there is Ethereum. It was up over 100 times last year. So it's a really wide ecosystem today, but it's just very small still. It's 350 billion. It's only been around for 9 years. So crypto funds are really new. I think what makes us really unique is that we have a combination of experiences. Myself, I've been in global financial markets for some 20 years. We have on our team people with VC experience, and of course deep crypto experience. Myself, I've been investing in crypto for 4.5 years, and many of the team have been in this market for 5+ years. We have, as an advisor to the fund, as an example, Rupert Hackett. He's the CEO of bitcoin.com.au and one of the top Bitcoin authorities in Australia. During February, we also hired an additional analyst to the fund. We also have a new advisor to the fund in Kevin O'Hara, who's the CIO of Tula Group. We're very happy about that. So what are we doing? What's our investment strategy? So we invest across the crypto asset space. We invest in crypto assets themselves. We believe most of the value in this ecosystem will be captured in these native cryptocurrencies. And multi-strategy, meaning that we invest in different strategies, including in large cap crypto like Bitcoin and Ethereum. I think that portfolio is geared towards where we see the big potential in the long term, and that's in the money vertical. There you have things like Bitcoin, which I think is emerging as a store of value. We have more currency-like coins like Litecoin. We also have big verticals like general purpose platforms. Ethereum is one of them. But there are also other general purpose platforms coming up that are trying to solve problems like scaling, for example. We also have a small part of the portfolio geared towards ICOs. We've been quite careful in the ICO market. Since we launched the fund, we have invested in 2 ICOs so far, one in the energy space and one in the social media space. What we look for there is really, is there a need for decentralization? That's one of the key questions when we ask ourselves when we invest in ICO. Blockchains are really good for decentralization, and I think we need that around things like our identity. Today, or online identity is governed by large corporations like Google, Facebook, Twitter. I think it would be quite nice if we can take ownership of that identity ourselves. With digital assets like cryptocurrencies, we can take ownership of digital identity, other private data like medical data. We also invest in kind of the infrastructure of crypto assets like cross-blockchain platforms, like stable coins. I think is really exciting. And so on. The other part of the portfolio is more short-term. We have price differences between exchanges. That's arbitrage, and institutional investors like ourselves can take advantage of these price differences between exchanges and between crypto assets. We invest in futures, for example. Futures is financial derivatives that trade as a discount or a premium to the spot market. And again, we can take advantage of those price disallocations in the market. So that's a little bit about our investment strategy at Apollo. So what are we seeing in the market right now? I think two big themes for 2018 will be regulation and accessibility. On the regulation piece, I think we'll see increased regulation around exchanges, and I think that's could actually be a good thing. We have seen exchanges getting hacked in the past, and I think with increased regulation, we will see more institutional investors entering the space. I think here in Australia, we have new regulation coming into place next month around exchanges and AML and KYC. AML is anti-money laundering, and KYC is know your customer. So I think that's a pretty good development. I think one area where we'll see more regulation and clarity, hopefully this year, is around security tokens. Some of these ICOs in crypto assets are probably securities, but there is still uncertainty in the market of what is the security. In the US, we have something called a Howey test to determine what is a security or not, and that means that there is an investment of money in a common enterprise, and that the profit of that enterprise depends on work on others. And some of these tokens and ICOs probably fulfill the definition of a security. So that's something we look at carefully when we evaluate ICOs. Are these a security or not? If they are deemed a security, they might have problems getting listed on crypto exchanges. So I think that's a key theme for 2018. Hopefully we will have more clarity around the world. What is considered a security and what is a utility token that is can be used to pay for a service or a product. And I think one other theme might be decentralized exchanges. So we have a couple of crypto assets trying to work on decentralized exchanges. Most of the exchanges are centralized today, and again, some of them get hacked from time to time. I think decentralized exchanges could solve that problem. We have a project called Zero X, for example, in the top 100 coins, which are trying to solve the problem with centralized exchanges. I think we had Binance this week just announcing a decentralized exchange project as well. Finally, maybe talk a little bit about our portfolio and why you should invest in crypto assets. I think one nice feature with crypto assets is that they're not really moving together with stocks or bonds or commodities. They're really independent of anything else, so they can really diversify your portfolio by putting a small percentage of your portfolio into crypto assets. That could be a nice diversification. We think the upside is very big. The volatility is high, but I think the diversification is really nice in a kind of a broader diversified portfolio. So that's a little bit about Apollo and what we do, and I really would love a lot of questions from you. So please ask your questions, and I'll try to answer some of them. So one question we get a lot is, how do we value crypto assets like Bitcoin, Ethereum, and so on? And I think it's still very early days looking at fundamental analysis for crypto assets. I think Bitcoin we see as a type of digital gold. It's scarce like gold, but you can send it to anyone in the world as easily as an email for almost no cost, and it can't be taken away from you. So I think there is a real chance that during the coming years, Bitcoin can reach something like 10% of the market cap of gold. I'm not saying that will happen, but there is a chance that it will happen. And in that case, at 10% of the value of gold, one Bitcoin would be worth 50,000. So I think there is still upside in some of these assets. Another way to look at the market is to look at what kind of value is transferred on these blockchains. We have the value exchange equation that tries to determine how does the network value correlate to the value that is transported on these blockchains, and how does that relate to the velocity, for example. Another way to look at it is the NVT ratio. That's the network value compared to the online or on-chain rather transactions on the network. That's kind of like a PE ratio that is emerging for looking at these assets within a vertical. So that's some of the things we are looking at Apollo when we try to analyze these crypto assets. I think we have a couple of questions here from you. Brendan has a question asking where is the current market heading as a low in market cap terms. I think we're working on the thesis that we have seen the bottom in some of the prices back in February. Bitcoin went down to just below $6,000 the first week of February. I think that will be the bottom of the year for Bitcoin specifically. And I think the reason for that is that we will see more accessibility coming to the market going forward. We had, for example, the Robinhood app in the US that is launching crypto trading. That had 1 million people signing up for that app. And I think accessibility will really drive the market during this year. It's quite hard still to invest in crypto assets. I think a fund like Apollo makes it really easy to get exposure, but there are not that many funds out there. There are not that many listed instruments out there. Custody tax is still, I think, a nightmare for many investors to handle themselves. So I think once we have more listed instruments, once we have more funds, I think that will increase the accessibility. We will have more institutions coming into the market, and that's potentially a very big bucket of money that might enter the crypto market. So far, it's been mainly driven by retail investors, and we've seen some family offices starting to want exposure last year as well. But for most part, institutions have stayed out of this market, and I think that will change once we have, for example, an ETF listed. I don't know if we will see an ETF in the US this year, but maybe next year we will see that. So I think that will drive the market higher. The market is really volatile. It's down 65–70% from the highs, but it's nothing new in the crypto market. We have seen this kind of volatility many times before. Tracy is wondering, what do you look for in a white paper when considering investing in a pre-ICO or ICO? So again, I think not everything can be determined by the white paper alone. I think it's really important to actually speak to the teams. I think that's really important when you invest in ICO. Is similar to investing in venture capital. You really have to get to know the team, to evaluate them many times. And the second question again is, do they actually need a blockchain to do this, or is it just a way to raise money? Is it just a funding mechanism? And I think that makes it a little bit less interesting for us at Apollo. We're really looking for a good use case for blockchain. So those are kind of the things we are looking for. Facial is wondering, what is the security of tokens and funds at Apollo? So that's, I think, what are our top priorities is the security and custody of these assets. Again, there are not really any good institutional grade third-party solutions out there. So this is a really hard questions and a barrier to entry to the crypto fund industry. Most of our crypto assets are stored in what we call deep cold storage, meaning that they're not connected to the internet. They're completely online. I'm now talking to of the private keys now for these crypto assets, and they're split in pieces, and we require several signatures to unlock or decrypt these encrypted wallets that are stored in multiple locations. So we feel really good about our what we call deep cold storage for these crypto assets. We think it's really safe, and that's one of the top priorities for us, because security is a major issue still in crypto assets. I think we'll see more kind of institutional solutions the coming 18, 24 months evolving around security and custody of these assets. You really have to be careful as well. What exchanges are you trading on, and so on? Who are your counterparty? The protocols themselves have proven to be very resilient for the most part, but the third parties are the security holes here, and that's the exchanges, for example, and that's why decentralized exchanges are so interesting in crypto assets going forward, I think. And another question from Brendan. I'm wondering what you think about crypto lending services like Salt. Do you see that as a growing segment? I don't like to comment on a specific cryptocurrency. Salt is one of the top 100 crypto assets, so it's definitely on our radar. Lending could be, there could be one use case for crypto assets. You can earn a return by holding these tokens. VC lending in DAI as well, for example. So it's an interesting use case, but again, don't want to comment on a specific crypto assets. Let's see if there is another question. Please write your question if you have any more questions. So I think we had some good questions there. I don't see any more questions popping up. Maybe one more from James. We have seen a downturn in crypto markets recently. How does the fund achieve gains in bear markets? That's a good question. We don't have to be fully invested, so that's the nice part, right? We don't have to invest in all these ICOs coming out. And we also can diversify between our investment strategies. So we have, for example, some market neutral strategies. So we're not always fully invested into the market, and we also can generate returns by trading this arbitrage between exchanges, for example, futures, and so on. So that's how we can achieve better return than the overall market. And I think that's probably the last question today. Hopefully we can do this soon again. And if you have any more questions or get in touch with us, you can go to apollocap.io. That's our website, and there is a contact form there. And I think we'll try to do this on a regular basis. So hopefully we'll see you all again very soon. Thanks a lot.